Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So today's agenda, we'll go through the market update, just quick review of some of the earnings trades so far, and then I think Joe has a few comments. I don't think he's going to do charts today, so that's our agenda. Let's get started. All right. So overall, from last week, Green Pie did increase 54 to 76, pretty big jump actually. So we'll go into that analysis. Couple of transitions here. Russell and SPX were first, and then NASDAQ followed through into state sevens. So those were kind of big indications, but we'll go through the analysis on each one of those. So let's take a look first. As far as the market pulse, we've been let's pull it back here. Basically since the beginning of last year, let me grab my tool. Anytime the ones have popped up above, or I guess close to, have been like market tops. So, and that's, big picture, we had the big downtrend going for SPX, but using, like kind of this is a pretty good indication, as long as, excuse me, that downtrend remains in effect, and it, obviously still does, today it got right near it and reversed. This has been a pretty good indicator of, where the market tops were, with these run-ups. So as long as that downtrend's in effect, I'd still kind of, utilize this type of indicator where these things are getting near or, popping above as, the indicators of market tops. So, we'll have to see, basically when these things cross, you can see, pretty much right near the tops. This one didn't cross, but got real close. Even here, pretty much right on the tops there. So
the two states you have there are 1 and 8.
Yeah, that's 1 and 8. Yeah, and that's just something I've, this hadn't been a thing in the past, really. But we haven't had too many downtrend markets since, in my 6 years here. But yeah, the 1s and 8s are really, kind of showing when things are turning, because you have the bullish bearish, which is pretty good overall. But, this one, at least for this downtrend, which, started over a year ago now, has been a really good indication for that.
Say, Josh?
Yep.
This is Dave. Is there a way to put little markers on here, like little pasted something or others? Just to, like, it'd be interesting to see if the 1s and 8s, if that comes up just before a Fed meeting, if the Fed meeting, the Fed meeting has been a pretty decent trade last year.
Right.
Wonder how it fits on this chart with those times. But I'll go back and do it. Can you show us how? Can you put some sort of little star or a little arrow or a little dot or something on here?
No, not on this. On our charts page, you can do flags and things like that. So, no, you'd have to do it in like a snip type of format. Yeah.
I'll look into that.
You get the dates here. Yeah, you can find, it gives you all the dates here, but you just basically have to, like, okay, if there's a meeting here, you could just put it, in a vicinity, where it is. So.
Yeah. Okay. Thanks. Never mind. Keep going. Thanks.
Okay. So, I think that's one of the big things just to take away, because we got to the levels that we've been talking about for quite some time and, turned around today, but this kind of jumped out to me. Okay, we crossed over again. And that down, as long as the downturn's in effect, I would, use this. So, as far as the 5s and 7s, we still have pretty elevated, that's our crossover point. We've had quite a few of those before But, see if these things turn around, obviously. If we break the downtrend, then, kind of all bets are off for this type of indicator. But, these 5s and 7s and 1s, they're a lot more elevated from where they were in the past here. Just looking at the 5s, this downtrend, we're quite a bit higher than all this flatlining. So it seems like it's building, which could be bullish. We're set to see, and honestly, we talked about being range bound, and seems like it still wants to be range bound. We got 2 weeks until the next Fed meeting. So, maybe that's the impetus, but, things are, we'll look at the charts, but, that bottom level and, the downtrend line are going to be intersecting, probably in the next month or two. So it's going to have to break one way or the other. Okay. Overall bullish, bearish. We had to cross a while back, and now we're pretty high, kind of percentage wise, kind of normal, for these kind of tops is like 80, 70 something. So kind of normal for the top-ish areas, which, could mean pullback, but, not necessarily. Usually we have been getting a decent run after the cross. So at least the last 2 here. So what to see, maybe just, today's a fluke, but I think, getting above those levels is the key, and we'll jump into those here. Let's go to the chart first. So I did the downtrend line. It's kind of hard to see. It's at, let me get this tool so you can see it here. There you go. So that's the downtrend line, the long term. So we touched it. It's right above, 4,000 kind of area. So yeah, that's the big one that I think is very important overall, and pretty much coincide right with the Russell 1900 one too. That top level. So we didn't, got right pretty much up to it and turned around, down pretty good today. So, overall, I think at some point, we got 2 type of things going on. We have that this downtrend line, which is going to be, it's right above there, and then we got our 3,800 level here. So these things are going to, start getting pretty close here. As that didn't work. That figured it would zoom out. Let me clear that and do another one so it looks good. Yeah, downtrend, and then this is let's say this about 3,800 in here. So as these things get closer and closer, we're gonna have to break one way or the other. So that's I want to pull that out. As far as the state modeling here, we came in at 39.84. You can say we got a little above that 4,000 level, which we've been talking about quite a bit. That coincides with that kind of downtrend right around there. So that's still providing really strong resistance to the upside. So, getting above that is going to be a chore. So yeah, I think today we're down a decent amount. So we're about 50 points away from that now on the SPX here. So obviously to the downside, we get the 3,800. So that number is in between these stop losses, actually below the stop losses. So your first levels are going to be here, at least modeling wise, but the big one is the 3,800 down to the downside. Obviously 4,000 is key for that downtrend. And then, the top end of our range that we're in right now is 4,200, but we haven't seen that in quite a while. So that's our range here, 42 to 38. But really the key is getting above that trend line, that downward trend line that's been over a year now. So as far as state 7, not a big mover type thing. Only 12 days, kind of 3% on average. Typically it will go into state 5. 60 something percent, and about a quarter of the time goes into 8. Now, if we look at past ones, so this 7, went all the way up to 5. 5 was the top here. The 7, we had a big drop down, and then it kind of rallied up to a 5, and that was the top again. So typically it will go into 5 from here, but not all the time. So even if we get some kind of big drops, it still did make it to 5. So, but really, I mean, it's just that 4,000. That's just, we've been all over that for a long time. It's actually, out on Twitter, there's a lot of charts showing that now. So I don't know if that's good or bad. Like a lot of people know about it now. So, that downtrend. So I don't know. We'll see. I think we covered everything there, 38, 42, and then, this downtrend line obviously is the key. So the other one, Russell. So, had a good start here for state 7. It's 4 days in, getting up, got up to that target 1. It's going to have real problems though. Obviously that 1900 is right above target 2. So we did briefly get over the 1900 this morning for about a half hour. Then, drop like 10:30, we dropped below and just had a big drop from there. So as far as here, modeling wise, your support's going to be the entry price right now. This area, 1840, this call 1845. That's going to be, any kind of support. Obviously, our strong resistance is that 1900, which we touched. So we actually got to target 2, but if it does follow the typical pattern, it'll come down here and then try and get back up. So like that'd probably be in a week or 2. That if it does follow that pattern, which it it started off obviously doing. So if we get that pullback down here and it provides support, then we can get that that launch up to try and break 19 yet again. But we'll see if that happens. See if that modeling at 1845 holds. So as far as next state, 50 something percent going into 5, and then about 30% going into 8. So you can see the last couple here, 7 went into 5, 7, 5. This 7 went into 8, that 7 into 8. So, this one's just, if you look at it going back, a year, it's pretty much outside of this. So this 4 was at the beginning of the year, but since then, we haven't got any higher than 5. But it's definitely held that bottom level of 1700, despite all these 7s, 8s. So that 1700 is really important to the downside. But right now you can see, I mean, it's very clear on this chart here that 1900, which used to be really strong support, has turned into really strong resistance. And getting above that, just like it pretty much coincided right with SPX trying to get above that downtrend line this morning, between 10:30, they got above them or right at them, then immediately turned around. So that's the big things to watch here. On the big range on The Russell, it's our 19 to 17, and I'll just annotate it here. So used to be strong support, now it's strong resistance. So then, the downside 17, obviously very important. So, another failed, kind of failed. We had that one false breakout, and then failed there. And this one also had this one had that false breakout. We had that long range. I don't know, a lot of you guys have been with us a long time. So back here in 2021, we had this range, and it had that false breakout, kind of like this here in the false breakout. We had that long range where it was, like, oh, you can start getting bullish, and then, it's false breakout. Same thing here, false breakout. So this one, I still think, the keys are that 19, obviously, and that with SPX are going to be your keys. Otherwise, kind of range bound, maybe, to the next Fed meeting. If we can't break out of this, but it's, providing very strong support at 1700, which gives me a little inkling of, bullishness longer term. But, short term, it's just, we got to get through this 19. So, okay. I think that's a quick on the charts. Any questions or comments so far?
On the SPX chart, I just wanted to say, I agree with you completely on like a couple of weeks, and I think I'll be, we're right at where the long-term trend and the short 1 year downtrend is colliding, and it's like 2 weeks out. And the way my charts, the way I'm looking at my charts, which is right where the next Fed meeting is, which is right in the teeth of the big tech earnings week.
Right.
So, and VIX was at 19 yesterday, something. So, I don't know, it might be worth buying a VIX call or something. Yes, today it's 20. So yeah.
Yeah, it's actually acting normal today,
Yeah. What I thought too.
Yeah.
Which is the time to watch out for, right? Tech when things look normal in a volatile environment.
Right.
So yeah, I think 2 weeks, so another couple of weeks, meetings will be right. Well, I think we'll be in the know of what the Fed's doing and what they're not going to do, and a lot of things will be determined within 2 weeks, I think.
Right.
Earnings and earnings adjustments, whether they're going to go down, that's another headwind for a volatile period there.
Mm-hmm.
Thanks.
Yeah, I agree. Thanks, Dave. Okay. Well,
The other thing we saw earnings already start to diverge. Goldman Sachs.
Oh yeah, that one day with Morgan and Goldman, like
Morgan had good earnings, and Goldman Sachs missed everything. And United had blew everything away. United Airlines had great earnings, and so I think we're going to start to see some separation from those where the economy is impacting them and those who aren't.
Yeah, and separate the better run companies, that have been. I know Joe's been saying it's going to be a stock picker market year for a while. So
exactly, I think so, because Goldman Sachs. I mean, you would think they would do as well as Morgan Stanley. They're the beast, right?
Yeah, they're the well, them and JP are like the big.
Right. But they missed earnings badly.
Mm-hmm.
I think fewer deals out there, last year, and one thing, Sudhir, that just shocked me. I mentioned to Josh earlier today. Front page right column, Wall Street Journal today is Goldman, Morgan Stanley profits plunge. As you said, I mean, Morgan seemed to do, well. Goldman, certainly did plunge. I actually didn't go in and check the details on Morgan. Certainly they beat expectations on the street, whether
Yeah, that's
their
all I heard.
numbers, yeah, I don't know whether maybe their numbers were down versus last year, so year over year, but the headline struck me. Just, profits plunge. So you really gotta get past some of these headlines. That's
So
for
it
sure.
sounds like that Morgan Stanley, when you dig into it, did a better job of setting expectations, even though their profits went down, they set the expectations to the street correctly. And so they beat the lowered expectations.
Right.
Yeah, I
there-
agree with, sorry, Sadir, I wanted to just agree with you there. And I think the wealth management side of Morgan Stanley, it was like a super record breaker year for that group. And I think that's the trending group is wealth management, that people, wanting to put more money under other people managing because they're afraid of the recession possibility. So
Yeah, I think Morgan's typically a little more bearish than the other, big ones out there. So that's probably why they got some inflows, I would think. They're a little
yeah,
more
but Sadir's
usually
point
like,
is that
mhm.
that they're in the right spot with the most of their clients right now. It's I agree with that part of his scenario. There was, I think, right on. So way to go, Sadir. I think that's right on.
Yeah, Dave, just to second your point of wealth management, Morgan has rolled into that business much more over the last few years. And so it makes their earnings stream, I think, less volatile.
Yeah, Joe was saying he thinks E-Trade acquisition was probably a big part of that.
Not a
With
bad
the,
one for them. They also bought Eaton Vance, some years ago, which, anyway,
those are all
they've changed
dying.
their model.
All those mutual funds those things are dying.
Mhm.
Yeah. Like what's the one here in Tampa is Franklin Templeton? Yeah. Yeah.
Mhm.
No, I don't, a lot of them don't, there's some niche ones out there that are still decent, but I mean, overall, people are moving to the ETFs. That's been like over time. So, fees wise, I mean, just hard to compete with ETFs. So, okay. Good discussion, comments. Anyone else so far? I'll go into, obviously big data coming out today. PPI, what they look at is the core. So that's up, 0.1 month over month and year over year, 5.5, below what it was previously. Same with the, I was just looking at this chart with Joe. I mean, PPI year over year, right? So last January, it was up 10% year over year. This year, it's up 6%. So, I mean, it's up 6% from, this level where it was up 10%. So still, I mean, these things are, it's not like this thing's ever, gone, rarely goes below zero where you're actually, having deflation type, on prices. Obviously, this is still elevated, that 10, and then we're still 6% above that. So still, I mean, people get all bullish when they see these things dropping a little bit, but if you think, big picture wise, I mean, these things were year over year 10% up, and we're still add another 6% to that, so things have to come down a lot. Typically, they'll have, we won't get negatives unless we're in a recession or something like that. So I don't think prices are going to come down too much, but we'll see. See how things pan out. But, obviously, I think the market was, turned around today. Is just, this Bullard guy was saying he thinks long term are going to be up around over 5. So I think that really, and I think this Harker guy, I don't, listen to these guys, but I kind of see the headlines. But that seemed like it was the driver, at least today. That and Joe sent me that headline, Powell has COVID. So that was kind of all around the same time, I think. anyway. All right, so next Fed, we talked about that, pretty much right now. Last week we were at, 3/4. Now we're at like 94 for, quarter hike. So seems like, unless the Fed comes out and, slants it some other way, it looks like it's going to be a quarter for the next hike. So other things, the money. So reserve assets. So we had a flat week from last week. Did nothing. Actually went up, billion. But this is still kind of like the elephant in the room. Not talked about much, but to that's the level where we ran into trouble. Percentage wise, back in 19. So, and I showed you guys all those charts last week about, reverse repo, distressed debt, things like that. So I think that's going to be hitting the banks, distressed debt, especially for all these companies that have like floating rate type of arrangements. So, the money, I pulled this one up. It only does a monthly basis. So, we, me and Joe went all the way back. It's pretty much been like this. I was looking at 3-year periods, and pretty much every 3-year period is like this. It starts here and it ends up, start bottom left, top right. So, we're still in that, kind of, started, this is like a 3-year period-ish, start bottom left, finish top right, but, we have been flattening, so, and decreasing a little bit. So, I think it's, I'll be tracking this a little bit, but that was kind of peak, 22 billion. Yeah, that's 22 trillion. So this is getting very slowly, kind of decreased, kind of flat, do like a little swoop. This one's been a little better, but two things I think, this one I think is very important. I mean, this explains why, and, the prices in, the 80s versus now. I mean, this explains all of that. It's just this money supply. So anyway, just wanted to pull that up. I didn't have any good charts, so I've just been seeing a lot of my downtrend line that we've been talking about a long time coming up on Twitter. So I didn't see anything else really worthwhile pulling out. So I'll go through earnings next. Any other questions, comments on the market? No. Okay. It's our new UI. So we're still tweaking it, but got access to we had access problems for a while, but hopefully in the next few months we'll be pushing this out to you guys. So all right, let's see, bullish pre-runners. I think there were some this morning that came out.
There was one runner and one pre-runner came out this morning.
Okay, yeah, so 2 this morning. This is the only open one. All the other ones have closed at their profit targets. So Lincoln National entered like a week ago. So it's been close, but never hit it so far. These are all the other ones, they all hit their 25 so far. So so far so good, at least on the bullish pre-runners. We'll have to see what the market does overall. I think the banks are down pretty good right now. Yeah, overall the banks are getting beat up pretty good today. So we had a couple of runners populate yesterday. So Delta and Bank of America. So then this went down pretty good today, but I didn't check Delta, but I think the airlines were up a little, like one of the few. So these are just starting, so, we'll have to see, see how, the market does overall and, how, if we really roll over or not here. I think that's kind of the key, hopefully, we don't get, an earnings season like this. So this was what we put out this plan, the 15th, ran straight up until for a couple of weeks and this rolled over. So, hopefully it's not like that. It's like the other ones. But this was, I mean, it wasn't a terrible one, but, we just had to be careful this trend line is really, really important. So, the only other trade out there is a non-mover. So that was Delta on the 12th. So we got till Friday on this one. So I'll just show real quick. I like these charts. All right, so you can see, the low end was 37, the top end was 42, and we're at 39.50 for the medium. So you can see this one got right below it, but it's coming back above it. So staying within the bands pretty much. It dipped below, but ended up closing much higher. So going to be profitable trade overall. So obviously, ideally, you want to get back to 39.5. So it's up today, but yeah, that one should work out pretty well. So that's a good start for that one. But other than that, should be kicking into full swing. With the earnings here picking up. So any questions on that or comments?
One comment on type of, we had banks last week, right? So we know where the banks
Yeah.
are kind of headed. Tonight, I think Procter & Gamble releases, which will be interesting in my opinion for a couple of reasons. One, they got a zillion products, right? Procter & Gamble makes pretty much everything.
Right.
And they raised prices on all those things coming out of the pandemic over the last couple of years. So it'll be interesting to see if if they raise guidance again and do really well, then I don't think that will make a good argument on the inflation side. Might make a good argument for that stock side, but I think it might be a little bit of a tell on how consumers are sticking with brands or going to the generic kind of things to save money, and that might be a economic kind of a impression point in my mind. So we'll have to see about that. It's that one that looks the most interesting tonight that I wanted to watch.
Yeah, it should be telling consumer overall. I think I saw a headline about December was not good. It's like a negative reading for consumer sales and stuff like that.
Yeah.
Thanks, Dave. Anyone else? No. Okay. Joe, did you have anything you want to discuss?
Yeah, maybe I'll share a little bit here, Josh.
Okay.
Let me let's see. Let's see. Okay. Yeah, let's see. Just a couple things. If we go to the pie, I think it's certainly the first time in a long, long time that the bonds are in bullish states. Okay, all of them. So I think that really bears watching. Is that a nice tailwind for the market going forward? Time will tell, but I'd keep an eye on that. I did want to speak to, and Sudhir, your idea of just adding this, some months ago, I thought was fabulous. A little bit of history about, where we are right now at 76%. And Josh and I were talking earlier, I think today's sell-off is more about, there were a lot of numbers, and maybe, the market's a little bit afraid of the retail sales number being down as much as it is. And I frankly think that the focus for the markets is going to ebb away from inflation, because it sure seems as though, inflation has topped and it's going to be managed now. How fast it's going to continue to fall, remains to be seen. But I think the focus, for the market may be the economy itself. And so, today we get the salt retail sales number, and I think, the market has run awful far since the September 30th, October 13th lows. And, here we are at 76% in the bullish pie right now. So I went back, the last kind of big high in the market, on an interim basis was, the August 16th high. The green pie at that point was 81%. So, we're considerably higher in price, a little lower in terms of total bullish states. If we go back, I then went back to, the high in the market last, say November for the NASDAQ, early January for the S&P. And back then we got only as high as 71. Okay. And that was basically early November of last year. I think early January we were in the 60s. So, and then, we had that 2-week interim rally in March of 2022. We only got to 60. So, August, we were probably, from a pie standpoint, as overbought as we've been at 81. We're at 76 and change now. So I think it's time for the market, and clearly the last couple of days we're getting a pause. And the pause, the pullback is a little bit exasperated in the Dow, because Goldman Sachs yesterday, as we've talked over the last couple of months, Goldman's the number 2 weighted stock in the Dow. So that helped take the Dow down much more. Most of the other indexes yesterday were kind of a wash. I think today is basically a sell on the news. As I said to Josh earlier, we've had an up and down. Let's see. So anyway, the bonds there, I'd keep an eye on them. Here, and Amazon, we've been talking about for a while. Amazon did, as it turns out, go into a bullish state 2 days ago. So it's well off its 81 and change low, which was back, I think, in maybe December 28th. We've had a decent little rally there, but I think what you're probably going to get a little bit of is NASDAQ being, NASDAQ has gotten crushed more than anything else over the last year, as we all know. I think maybe the tide's going to turn a little bit. You saw that yesterday. Dow, getting beat up basically because of the Goldman Sachs situation. NASDAQ actually, was up a touch yesterday. So I think NASDAQ going forward is really a key to watch. And, just went into stage 7, last night. So we'll keep an eye on that. I think, short term, we're going to get a little bit of a pullback, in the markets, just because, we've kind of gone so far. And then, as Josh says, getting through 1900 and, that downtrend line in the S&P is going to be critical. Possible headwind for the market. The inflation story is that, oil has just rolled into a bullish state 2. State 7 only runs 13 days, but, another important thing I think to keep an eye on here. And maybe, just pointing out, we were talking about earlier, Goldman Sachs, you were saying, how the street managed its expectation. It was close to its yearly, pretty close to its yearly high, before the move yesterday. So lot of different cross currents. There's Morgan yesterday. A lot of cross currents. I think keeping an eye on these bonds, is important. 10 years down below 340 today. So, that thing has moved a ton. And
another piece of bad news, Joe. This morning, the headline on CNBC is Microsoft announced a 10,000 person layoff.
Not unexpected, I think, Sudhir.
Yeah,
You know, yeah. So, and I think what's it doing today? Is it? I think I hit it up this morning. It might have been up slightly. Let me see.
it's down
Microsoft.
0.18%, not a huge move, but
Right.
you know, one of the things about, you know, companies like Microsoft or Apple or whatever, when they announce a big layoff like this, I mean, this is as close to a commercial company that's a monopoly. You know, who doesn't use Windows and Office, right? And so it's as close to a monopoly as you can get. Of course, they have other businesses that aren't a monopoly, like Azure, the gaming and all that. But you know, when they say that they're seeing softening in the macroeconomic environment, you got to lay off 10,000 people. You know, you would think they would be always the last hurt. You follow what I'm saying? And I think, you know, them saying they got to lay off 10,000 people is different than maybe a competitive company like Bank of America saying they got to lay off 10,000 people. You know, they have such a huge moat around their business, right? That's a telling sign, I think.
Yeah, and you know, getting back to, I'm not going to go through kind of the recap of earnings expectations again. Maybe we'll touch on that again next week. We do it pretty much every week, but you know, these guys trying to stay ahead of you know, expenses that are too high. I mean, yeah, it's interesting to see where we go.
Yeah, Microsoft still has a PE of like 25. So, you know, you think of a high tech, you know, solid, no competition, but their PE is still 25, which is maybe 10 points higher than the average S&P, I think, right about now. I'm not sure about that, but it's still up there. The companies with elevated multiples got hit when they reduced guidance. So if they reduce guidance but still come in, it might be tough for tech yet in this earnings cycle. We'll see.
Yep. I think one last thing, you know, next week I'll review them. I've stayed away from the retracement numbers for, you know, a while, but I think getting a sense for the strength or lack thereof of the market will show in this pullback, you know, so whether we just get down to a 3/8 retracement or we, you know, exceed, that'll be interesting. So we'll definitely review those numbers next week. That's it from here, Josh.
Okay, thanks, Joe. All right, well, before we close up, any questions or comments? All right, well, thank you all. See you again next week.
Thank you. Good meeting.
Have a good week, everybody.
You too.